thank you for being here. And I think it's fair to say that stablecoins have been the buzzword of 2025. Name it, PayPal, Stripe, many banks. It feels like there's not one player that's not looking at stablecoins. So I'm absolutely delighted to be here with our guest panelists on this panel to talk about stablecoin, trust, and scale. Before we start, just to anchor and to make sure everybody has the same numbers, market cap, as I looked yesterday for stablecoins, is reaching 310 billion. That's a 33% year-on-year growth. Yet, 99% of stablecoins are still US dollar denominated. And I don't know if you knew that, but actually we often think of Circle and Tether as leading the charge, but there is over 200 stablecoins in USD alone. So it looks like quite a fragmented market. It looks like a lot of things are definitely happening. There is no doubt that the Genius Act was a very big unlock for the entire industry and for all the use cases that are coming. So today, delighted to be here and looking to explore with our panelists questions of trust and scale. And actually, I thought maybe we should start with use cases, because I don't know about you, but very often in places where I go, people still say, yeah, but stablecoins are just used for cryptocurrency trading. Is it though? Is it really what's happening? So maybe Marco, let's start with you. Like use cases, what do you see at Tether? What's actually happening when it comes to stablecoins?
Yeah, so a really pleasure to be here together with you guys. So I mostly worked in emerging markets since I started working for Tether. And in the beginning, we could see, like, let's say in 2018, 19, 20, that most of the market cap and the volumes was built up from trading or derivatives, exchange volumes in general. Nowadays, we see a big shift in payments, actually. So I would say after COVID, and we realized this afterwards, people at some point couldn't go anymore to exchange cash on the streets. And in many countries, you have central bank fixed rate for currencies, while you have, let's say, an informal rate on the streets. And at some point, these become, from the central bank side, these become flexible. Sometimes they have to, let's say, release the fixed rate. And people find a way to not lose money, to survive. And during COVID, no one could go and exchange cash on the streets, so they started using peer-to-peer. Especially probably on Binance was the most relevant, let's say, exchange where this was happening. And so we saw a huge increase of peer-to-peer for USDT, 2021. Afterwards, remittances, cross-border payments, trade finance deals. And ultimately, it comes to the fact that stablecoins are cheap and are fast. So, like, nothing to say against, like, say, payment schemes, but everyone knows that payment schemes like Visa and MasterCard, they settle twice a day, 5 days a week. So if you want to settle a merchant on a Saturday or on a Sunday, you cannot.
Exactly.
You can do clearing on a Saturday, but you cannot settle a transaction, and you cannot settle a transaction in the night. So this was what made big payment processors to say, maybe we can use stable coins so that our merchants will be happy that we send the money and we settle the transaction on a Saturday and a Sunday. So, and these actually makes a big growth towards the market cap of stable coins, because then USDT and all the stable coins remain in circulation.
Okay. Well, so I think you're starting to debug the myth that no, it's not just for cryptocurrency trading. Bob, I'm very interested actually in your perspective, because you have an incredible background in TradFi, but also like starting to look at the entire market. What use cases do you see? Where is the adoption from your perspective?
So we were an early investor in Circle, similar to Tether, a stablecoin. And I think this is a very sophisticated group here in Abu Dhabi this week. But if I'm talking to people uninitiated, it's really transactions, 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 transactions. And unlike Bitcoin, which is for most people a store of wealth, which they recognize will be volatile, then Circle from the very beginning, and Jeremy is the founder and CEO, is very clear. We want to be the most boring, the most regulated, the most staid, because it's a stable coin. So in 2002, when we were hoping to bring Circle public via a SPAC, BlackRock came in the private round, as we did with our fund. And what BlackRock provided was a money market of one to house the fully reserved USDC in a money market, in treasury bills and cash, with access to the Fed window, where people could honestly look in the mirror and say, a dollar is a dollar is a dollar. So it'll never change. In theory, it'll never change in practice. And what we're looking for is the use case. And I think, being here today and thinking of my time at Barclays Bank, where we operated in 60 countries around the world, if Atlas Merchant Capital, using Barclays as a bank, was going to send money to Mubadala here in Abu Dhabi, we'd go to our bank, there'd be a correspondent bank somewhere between there and here. There'd be a bank of Abu Dhabi, First Bank probably for Mubadala. They'd all confer 2 or 3 or 4 days later. We'd have a transaction of 100 million. It would cost us a number of points in terms of transaction fees, as opposed to US digital coin. Instantaneous, 24/7 at the speed of the internet, with no one standing in the middle, and de minimis fees. That's a change in the world. And if someone tried to explain the opposite to us, which is we're going to stay with that banking system, we're not going to accept the fact that the internet and blockchain provide the trust and the speed, it would be impossible to convince us. So long-winded answer, thank you for asking, but I think the use case is transaction.
Perfect. And all the names you mentioned, this blend of TradFi with what was considered DeFi definitely is there. I mean, Julian, turning to you from a custodian perspective and a custodian who's actually regulated across the world, the use cases, your customers, like what are you seeing?
So I think there's probably 2 things to think about. One is I think we're starting to see the second generation of stablecoins coming out. So what do I mean by that? The first generation we were just talking about was about crypto trading and facilitating that. Now what we're trying to see is what are those use cases. And I think what we're understanding across the market is there's a huge growth in stablecoins. Almost every day you're hearing another bank is issuing that. And why? Because they're trying to find product market fit. And I expect there will be consolidation over time, and I think that is probably a healthy thing. But if we look at the exact use cases, I think we've got to understand where the current financial services system is inefficient. And that really is going to be supply chain finance, trade finance, remittance processing, etc. When we look at domestic payments, it works for most people. If we look at Visa, MasterCard, it works, and it is relatively cheap, if not free. So I think we've got to think about where is the pain, where can we settle 24/7, where can we move a huge amount of money, as Bob said, instantly at fractions of what the existing financial services sector does. And that is where you will get traction. And I think that's where it's going to be important to understand where those use cases are.
Okay, perfect. Thank you. And maybe turning to you, Michael. So you're based here, and Zenbank is actually regulated here. And I think you also have a role to play in local stablecoins. So maybe walk us also through some of the use cases and how you're actually seeing that being implemented.
Yeah, sure. We are launching a dirham stablecoin, the multi-public blockchain. In the past, actually, we have a US dollar dominates, and right now you have more stablecoins launching in each country. Having this actually change a bit actually on the trade behaviors. You can imagine, for example, like the trade import, export from the China and the UAE that could actually think about to settle in the local currency because you can have mint and burn on the both sides. So that's one. 2, actually, because stablecoin is the basic infrastructure for the for digital infrastructures, we enable also the programmable features.
Yes.
Especially when you talk about the e-commerce space, when you have micropayments. In the past, actually, that's that you have to suffer from the cost of the SWIFT probably will be too high for the small value. And right now, you can imagine, actually, you can settle by merchant, by item to the supplier directly. So this can be the second one. I think the third one would be the most powerful one. Actually, the tokenized action will be more and more. You need to have actually the currency paired with the RWA in order to transact. So I think the infrastructure itself is very critical, in terms of investment aspect and also the trade aspect.
Yeah, I think it's great because so I hope that with this first question, we're actually debugging the fact that stablecoins are not just for cryptocurrency trading, whether it's actually, payments rail in different countries, whether it's actually transaction, or this mix of TradFi use cases that are coming on board, but also the payment rails of the future. AI agents would struggle to get a proper bank account, so why not a crypto wallet? I want to turn to regulation and start talking actually about something that we talked about backstage, which is the fact that across the world, it seems that no two countries are taking the same approach for something that ultimately is moving money. And so maybe actually, Bob, if I start with you this time, from a US perspective, it would be great to actually start getting your perspective on regulation, what changed and where are we now, and therefore what can happen going forward.
Just an absolute sea change in regulation from the US with the current administration relative to the prior administration. Under President Biden, Janet Yellen and the Treasury, Gary Gensler, who was probably the one I'd accuse most of malign neglect in the SEC, it was just no, no, no. So we never were accepted at a $4.5 billion valuation for a Circle. Over 2 years, they never allowed the SPAC to become public. And we've all seen the value of Circle in the market. You compare and contrast that to the current administration with Scott Bessent in the Treasury, with Paul Atkins in the SEC, with Jay Clayton, the Wall Street cop. The attitude toward financial services is very much financial services. Make regulation more simple. Make capital levels more understandable and probably a little bit lower. Don't try and regulate digital or crypto. Regulate financial services and integrate those two together, because we can see the convergence in tokenization and stablecoins and exchanges. So the attitude now toward being positive about innovation, about progress, about one set of regulation that covers financial services, not one set for crypto or digital and one set for traditional finance, is really the future. And when I sit here and look at what I've learned since 2021 about blockchain and that technology and the power of that technology, I'm very comfortable saying that within 2 or 3 or 4 years, we're going to see blockchain is the prominent underpinning of technology for financial services writ large. And it needs that one integrated regulation. So I just think it's been unbelievably positive this year and a real sea change to the past. And that's put the U.S. as an investing venue in a very, very different place.
Yeah, absolutely. I mean, Julian, maybe taking your views, because you're regulated across the world and in many different jurisdictions, right? So how different does it look like? How fragmented is it? Slightly leading question.
I think there's probably a couple of things here. One is, if you look back at regulation of crypto and stable coins, I think you've had a number of jurisdictions that have tried to out-trump the last one, the next one. So whether, MAS in Singapore was leading, or the FCA in the UK, or ADGM here, etc. Each of them have all tried to get a more robust, more open, more engaging set of regulation. I think, again, Bob is right in terms of, yes, this is not about crypto. This should be around financial services and regulation. I think the other challenge we've got, and perhaps I could call out two here, is it's the misalignment across jurisdictions.
Yes.
And I think that is going to cause more and more problems. And I think we've got to find ways of helping the regulators to understand the unintended consequences which are in the regulations, but also to ensure alignment between these regulators and within the markets to get to the right area. The last point, and you mentioned obviously we are a custodian, but actually having definition of what a custodian is, I think, is critically important for the assurance of the regulations and also of customer funds, because while it is about transactions, underpinning everything is trust, and that is around where are your assets kept, how are they safe and secure. So I think there's a way to go. I think we're seeing some great progress in various different countries and jurisdictions, but I think we should understand that we're not aligned across the globe as much as we should be.
Yeah, I agree. And it feels like, this misalignment actually is counterintuitive, because ultimately it's a financial system that needs to work. Mm-hmm. And countries need to have this vision and mission, for example, taking from the lead of the US. I mean, I'm curious, actually, Michael, you're based here. And so getting your perspective on the region, adoption, working with regulators, what does that look like?
The UAE is very push on the innovation agendas. If you look at actually the 2032 to 10 years program, we talk about the digital strategies. And under digital strategy, you have three pillars, including virtual asset blockchain. The second one is AI, and the third one actually is smart infrastructures. If you look at it, actually the base foundation, again, is a stablecoin, because if you don't have a stablecoin or the CBDC, you cannot really move further things. Well, with a very ambitious, the agendas like double the digital economy's GDP by double in 10 years, the regulation itself is open enough actually to allow the innovations. And also actually they take very serious measures. They try to study actually what's the gap and what's the regulation best practice in the other places. We're launching stablecoin again. So I think this is really big help actually from the regulators. Despite actually in the UAE you have a different regulators, but I think actually it worked well because they heard enough the market noise and they are very ambitious on growing the digital asset hub in the world.
Again, I think this idea of ambition, what does the future of finance look like, seems to be a core theme that every government should take at heart. I mean, Marco, I'm not forgetting you. I think it would be amazing to also get your perspective. Look, I mean, Tether has been recently downgraded, for example, by the S&P. You have a different perspective of capital allocation and how you look at that. So what's your outlook on actually regulation where it stands today, but also how do you see things planning forward for 2026?
Yeah, definitely. I mean, we really appreciate let's say, clear regulatory frameworks because bring solidity to our market. Making a comparison between MiCA and Genius Act, as we were just talking, Genius Act is quite flexible as a regulation, so it doesn't state the exact number of each liquid asset that you need to have as part of the reserve. MiCA instead forces a stablecoin issuer to have around 60% of reserves in cash, which are, if you make the math, should be held in at least 12 banks. And it's not easy. You have been in stablecoin for a long time. It's not easy to open 12 bank accounts. And plus, you are subject to risk because usually are not the big banks that are going to open your accounts for a stablecoin issuer. So that's really dangerous. And coming back to what has been said, imagine all the jurisdictions doing their different reserve management policies. So then you live in a world for which you don't have any more fungibility of stablecoins because one could issue in US and could redeem in Europe. And in Europe, the reserve ratio is completely different. So, and you should redeem based on the reserve policies of that specific jurisdiction. So we are trying to, let's say, to tell our vision and what should be done, in our opinion, to being able to survive when the market is stressed. Because when the market is easy, everyone is, even all cash is fine. But when the market is stressed, like when it was Luna Terra in March, April 2022, I was there redeeming 7.8 billion in one day and 24 billion in 1 month. Is in that moment that you test not only the stablecoin, but you test the whole banking system connected to it. And when it comes to S&P, to be honest, we smile because is a judgmental opinion. So they missed out all our income statement and balance sheet. They missed that we make 500 million a month of profit just of interest rate from treasury bills. They miss that we actively rebalance, hedge, or can trim positions. We're not going to wait that Bitcoin is going to zero or whatever, and say goodbye. They miss the fact that we have more than 30 billion equity in our balance sheet, that we are over collateralized over 100% by 6.7 billion. So there are a lot of things missing, but I think that the market is using, and individuals and companies are using USDT because they see how we work, and they saw that in the moment of panic we always redeem. Then what happens in the secondary market is not manageable by us. If some exchanges may not have enough liquidity or they don't have enough liquid policies on their order books, we cannot handle that. But on the primary market, we have to show seriousness. That's why we always maintain our policies.
Okay. We're almost out of time, but my last question is actually quite a big one. 99% of stablecoins today are in dollar. We hear a lot about de-dollarization. We hear a lot about debasement. And so I'm just curious, maybe your quick take on, do you think we're going to be in a multi-stablecoin world? Is it going to be still dominated by US dollar? Is gold going to have a role to play into that? and being conscious of time. So maybe starting with you, Michael.
Well, I do believe actually that will be multi-currency stablecoin will be happening because in the government point of view, actually you want always attract the foreign direct investment, right? Second, actually that because of the trade war actually become more efficient. You have more than the US dollar itself. That's my view.
Okay, Julian, what's your view?
I think it's mixed. I think obviously dollar has a massive role to play globally, but there is absolutely a use case for local and regional stablecoins. I think you've got to then understand what the use cases are and then understand where those payment corridors are going to be, because you may not need to go via the dollar. You could go between two other. But I also think there's a lot of economies which need a stable coin to ensure they are kept up to date with the technology and what stable coins can actually give them.
Okay. Bob?
I think the related question, which I'm going to answer, I get to make my own, is will the central banks create the digital currency or will the private sector? And this is a hot debate 3, 4, 5 years ago in the US. And Eric Rosengren, who is doing the white paper as the president of the Boston Fed, is now a member of our team. And I recall when he was doing the white paper, he pointed out that, the Fed has absolute brilliant economists throughout the United States, but no one would hire the Fed to develop technology. And if you think about the Fed wire was invented, developed by private actors, and then heavily, heavily regulated by the central bank. And that's the model. That's when the penny dropped for us, which is that the central bank is there to allow the free enterprise system, private sector, to develop stablecoins. And I think it will be the victory of the few, not the many. There will be small, clubby type of coins for individual banks, but in terms of transaction, we'll see a few winners, heavily, heavily, heavily regulated by the Fed and by other central banks. Okay,
wonderful. Marco?
Yes, very briefly, I think that it would be really hard for new stablecoins to recreate the network effects that USDT, USDC, and a couple of others have made in emerging markets. It's true that the local stablecoins will play a role, and connecting to the gold aspect, actually, the problem when you do a local stablecoin, and so you can make an on-chain cheap and fast transaction, is that the reserve management of it, in many countries, you don't even have enough debt to back that stablecoin. So gold would play a big role in terms of collateral. We are seeing Tether Gold rising in terms of market cap, and we are accumulating more and more gold for this reason. Now we own more than 120 tons of gold. And we expect that actually Tether Gold XOT will be the next big thing.
Well, gentlemen, thank you so much. This was a wide-ranging conversation. I feel we could keep going on for hours. At least I would love to keep going on for hours because this is a very deep topic. I hope this gives you actually insights into trust and scale for stablecoin. We are definitely past having stablecoins used only for cryptocurrency trading. Regulation still needs some harmonization because ultimately we do need financial capital to flow. And I think the jury is still open whether we're going to see, multi or a few winners, but you heard different perspectives. Thank you so much.
Thank you.
Michael, Julian, Bob.